Okay, great. I think we are recording now. All right. So welcome to your bonus session for implementation and question Q&A about taxes for your business. This is your bonus session for, when you purchase your all access pass to the eCom Seller Summit. So you get something that for a price that you would not ordinarily get. Let's say that. All right, so I am going to just kind of go in the order that you're on the screen, and so you can tell me a little bit about your business and then what your specific concern is if you have any. Okay, so Sanjeev, I hope I pronounced your name correctly. You have the floor, and if you could please mute your microphones when you're not speaking.
Yeah, so I sell mostly on Amazon and Walmart. From last year, I started 2 years back, so I didn't have all the books corrected because I'm not maintaining the account. I'm using my personal card and business cards, so I want to separate it out, and I also want to know what are the other deduction I can take. Like I have 2 kids who are helping me, so I don't know if they have to how do I pay them, or like do I have to run because they are helping me in my business. So yeah, I want to know just about that.
Okay, so there are some things I don't understand. So I heard that you're selling on Amazon and Walmart, and then you said something about business and personal cards. I didn't quite hear that.
Yeah, so last year I didn't maintain the account properly, so all this business and personal is mixed up. So I have to separate those out, and then I have to make the PLN separately. So that way it's much easier to file the tax. So still I'm working on my paperwork. I filed the extension, so I didn't, still collecting all the paperwork.
Okay. All right. And so, so yes, you have to separate that out. As far as your deductions, I have a checklist of deductions for eCom sellers. I usually send that out, but I thought y'all might have got tired of that, so I guess I will keep sending that out.
Yeah, that will be great.
Okay. So I'll have to send that to you guys. All right, and so in that checklist is a whole litany of things that you can deduct. And you can also deduct your home office expenses. For your home office expenses, this is an area that you use exclusively for business. Now, if you keep inventory, where you keep inventory is also considered part of your business, so you can deduct that as well. As far as your kids helping, how old are your children?
They are 14 and 17.
14 and 17, okay. So the way that you could hire your child in your business, and you are a single member LLC, is that?
No, to a multi-member.
Okay, is your wife the other partner?
Yes.
Okay, so that when it comes down to a multi-member LLC, when you have 2 partners, both partners have to be the parents of the children that are working in order for this deduction to work. Okay. So there's all those extra rules. So with your kids, have you been tracking their time?
Yeah, somewhat we tracked last year. So this year we are formally tracking everything.
Okay, so that 17-year-old, as long as they're 17 or under, this absolutely does work without using payroll. Now, if, and whether or not to use payroll really depends on whether or not, it really kind of depends on what you're going to do with the money. So if it's just paying them for work, as long as you're staying under that 12,000, whatever the standard deduction is this year, I think it's 12,400 for 2020. I'll have to double check that. I got a lot of numbers running around. So as long as you're staying under that and you're paying them a reasonable wage, then you can deduct that expense. But it is the documentation has to be tight. When you are hiring your child, you need to treat them like an employee, like an actual employee. And when I say that, think about you hiring a stranger. You would have them fill out an employment contract that details exactly what their job is, how much they're going to be paid, how many hours per week to work, that kind of thing. Okay. And then you have to track that time in what they're doing in the business. So if they're spending an hour a day or whatever that, whatever that is for you, you got to track that time. Okay. Anything, if you pay them more than that 12,400, then they have to be on payroll and you are deducting wages, federal taxes and all of that. So, so that's what you have to watch out for. But as long as you have the documentation to support what they have done in your business, and you track their time, and you're paying them, a salary commensurate with what they're doing. So let me explain that as well. If every state has a minimum wage, and so if they are performing a minimum wage job, then you got to pay them at least a minimum wage. Okay, and if what they're doing requires more than a minimum wage, so you can actually call like a temp agency and say, hey, if I'm looking for an administrative assistant, right? What would that cost be? And they can give you, an idea of what that hourly wage would be for a temp, for a temporary assistant. So does that help you?
Yes, that's right. Yeah, got it. Yeah.
Okay.
And I have one more question.
Mm-hmm.
So Amazon is collecting the tax on behalf of us. So do I have to file the tax with my state? Not the tax, like a sales tax. I was talking about the sales tax.
Right. Okay. So with sales tax, even though Amazon is collecting the tax, you really have to be careful with this, because Amazon, by and large, is collecting and paying tax. But if they don't meet the threshold for filing, as a marketplace seller, but you do as an individual seller, then you would be responsible for that. So even though, by and large, Amazon is collecting and paying that sales tax for you, you need to make sure if you sell in an area that Amazon does not as a whole really sell to, I don't know where that could be. But if there's a particular state that you're paying, that you have sales in, and you meet their threshold, even though Amazon doesn't, then you need to make sure that you file and follow what that state law is. So trust but verify.
Okay, got it. Thank you.
Okay. All right, cool. Miss Kathy.
Good morning. I'm Kathy. I have a full-time job in addition to selling with Amazon and eBay. Had a question. Is it necessary, because I'd like to expand to another market, is it necessary to get an EIN, and how would it impact me and my family's taxes?
Okay, so do you need a tax ID? Nah, no.
Tax ID, but not an EIN.
They're the same thing. Tax ID and EIN are the same thing.
Oh, okay. Oh.
Yep. So yeah, you can operate as a sole proprietor under your social security number, or you can have a tax ID. As long as you're a sole proprietor, it's going to look the same. Your taxes are going to look the same. So, like, when you say you're looking to expand to another platform, like, what is your revenue right now?
As far as on sales on the two platforms,
Mm-hmm.
So far this year, about 7,000 this year so far.
Okay. And what kind of products are you selling? Are you like, how's that? Are you like FBA, or how's that?
Yeah, I do FBA, except for, of course, eBay, I ship myself.
Okay. So yeah, I mean, you can do that under your social. You can also get the tax ID. I really look at it more from the tax standpoint. Whether you get a tax ID or not, the taxes are going to look the same. There's no impact there. As far as your taxes go, with you being a sole proprietor, this is going to be a part of your personal return. All of the business structures actually end up on your personal return in one way or another, except for a C corporation, kind of. Okay, so whether you're an S corp, a multi-member LLC or partnership, or a single member LLC or sole proprietor, it's all going to get mixed in with your personal taxes anyway. So so the tax ID makes no difference. Your taxes are going to look the same. Your profits and losses are going to be taken on your personal return, and any profit you'll pay the self-employment tax on, and that gets added to your personal income tax.
Okay. Is there software or a spreadsheet of sorts you recommend for bookkeeping? I'm doing it, but I'm not sure if I'm collecting everything, and perhaps maybe I just need your deduction sheet.
Okay. So yeah, with bookkeeping, it really just depends on your volume. Okay. And, so tracking everything on a spreadsheet might be absolutely fine for you. But as you grow, that might not work anymore. So it really just depends on your volume and what you can keep up with as an individual, right? Because if you start having 1,000 transactions a day, bookkeeping is not going to work out, right? With you doing it, that's not going to work. So yeah, so as long as you're able to manage it, that's fine. But 9 times out of 10, if you stay consistent with this, you're going to get to a point where you cannot manage this yourself, and you'll need to outsource that. Now, like, we're a QuickBooks Online firm. There are lots of other stuff that's out there. As far as recommendations go, outside of QuickBooks, I recommend Xero, Xero, because it also has a lot of integrations with the different platforms. So like Amazon, Shopify, eBay, all of those platforms integrate with QuickBooks Online. And that's not the case with all of them, okay? So whatever platform you use for bookkeeping, you wanna make sure that that it integrates with your bookkeeping software, because that's going to reduce the amount of hours required to perform your bookkeeping, which would then keep your costs down.
Okay.
Does that answer your question?
It does. I will just look forward to getting the deduction checklist, so that way I can add that to my spreadsheet.
Okay, let me see if I can find that right now. Gotta see where I can. Thing.
Oh, there it is, right here.
Are meals still deductible?
Business meals are, for 2020, are 50% deductible. For 2021 and 2022, business meals provided by a restaurant are 100% deductible.
Okay.
And that is the attempt to revitalize the restaurant industry. So, yeah. But now, with your business meals, that is again, documentation is key, okay? So let me also say this. With business meals, this is with you meeting with a client, if you're meeting with a supplier or something like that. If it's just that you happen to be out sourcing products and you need lunch, that's not tax deductible. So I just want to make sure that's clear. But it is, make sure your documentation is right, is tight, and you have the actual receipt. The receipt is going to detail what you purchased, the cost, the date, where you were, and all of that. And then you just need to add which client or vendor that you met with. Does that make sense?
Yes, that's
Okay.
very helpful.
All right. So I am trying to see where I can, it doesn't look like for some reason, I can't upload the file here, but I'll make sure that it gets emailed out to you guys.
Thank you.
Okay, did you have anything else?
No, thank you
Okay.
very much.
Okay, awesome. Okay, Miss Annette.
Hello.
Hello.
I do Amazon FBA and I do use Inventory Lab. So can you just explain briefly how, like, what exactly do I need to print out from there for my taxes?
Okay, so for your inventory, you need to have your starting inventory, your ending inventory, what you purchased for the year, and also what was sold for the year. So those are the 4 components of your inventory. I need somebody to mute. I'm not sure who. Okay, so from your inventory lab, you should be able to print off those particular things, so that, because on your taxes, what gets deducted that year is your cost of goods sold. Your cost of goods sold, it may be what you purchased, it may not be what you purchased. It just depends on how you turn your inventory.
Okay.
Does that make sense?
Yeah, that helps.
Okay.
Yeah.
Because I still hear a question in your voice.
And the whole tax thing just confuses me. So
Okay.
there's always a question in my voice.
So here's the thing, and this is what I really want to make clear to all of you as business owners. It's not your job to know the tax law. It's your job to know what numbers you need to give to your tax person and what documentation you need to have to back that up. That's your job. And then to go make money for your business. You know, as long as you are tracking these things, you're tracking your inventory, tracking your income and expenses, everything else can be fixed. So whether or not, you know, you happen to have printed the right report, okay, we can go back and print another report. But if you just don't have anything, that's when it becomes tragic. So, so I would just, you know, tell you to take a woosah, you know, and also ask your tax professional to really review the return with you, so you can understand how the numbers go from like your inventory lab or your profit and loss statement and how that lands on your tax return, so that you can make the correlation between the two, so that in the event that something doesn't look right, you know it doesn't look right, and you know that you can, you know, that you should go somewhere else.
Okay.
Thank
you.
Does that make sense?
Yeah, thank you. That helps.
Yeah, so ask the questions, you know, like, okay, so I've given you my numbers for my inventory, where is that here? And they should be able to show you that.
Okay.
Okay?
Yeah, thanks.
You're welcome. All right, Miss Tina. Okay, now you're muted, Tina.
I did it the other way. Hi, good morning.
Good morning.
I don't really have a question for you.
Okay.
I just want you to know that I thank you for all the information you share with us here at eCom Sellers. And then I also follow you on KB's site. So, yeah, so you're good at what you do. I'm new to the digital market, so I haven't set up anything yet. So I don't really have a question for you, except maybe one, like for a payment thing. Does it make a difference if you use Cash App or Zelle, or does
that is a most excellent question. Okay, So yes, it does matter. And here's why. You have to be careful with platforms that are normally meant to be personal cash transfer apps. So now Cash App has a business option. Venmo has a business option too. So if you're using these platforms, make sure you're using the business option if you're using it for business. Because if you are using it for business, but you're not paying them their fees, if they find out that happens, they will shut down your account and they will keep your money and refund it to the customer.
Wow.
I have seen it happen and it's ugly. Okay. So be very careful with that to make sure that you are using the business version of those platforms. And so now I get it, because it happens with me in the tax world, because everybody's like, here, let me just Zelle you this money real quick. I'm like, okay, because I'm going to make it easy for you to pay me. However, just know that that should be like a few and far between and not a regular occurrence.
Okay.
Yeah, there's a difference between you getting your money and not get your money. But but just know that those platforms, if they have business options, if it's for business, that's what you should be using.
Now, I've heard some nightmare stories of people say you shouldn't leave too much money in there, because even if a customer pays you, some of the people, if they're good scammers, they can take from your account. Do you know if that's
Absolutely.
also, is that also true?
Absolutely. I do not leave, like even with my PayPal account, I might leave about $500-ish in there. Nothing more than that. The rest of it gets transferred to my bank account. That is absolutely true. You should not leave your money sitting on these platforms.
Oh, okay. So it is true.
Mm-hmm.
Now, is there some options, do you know, Lusundra, that you could put it at a level, or you just make sure you just leave it, like you said, at 500 or under?
So I know Cash App has a setting where you can have an immediate transfer. I'm not sure about Venmo, and I think Venmo does too. So check your settings and see if you can do like an immediate transfer so that your money is not sitting there.
Now, as far as the Cash App link, should it be under your business or just your phone number, or should you make it something very unique?
So it just depends on the primary purpose. Like my Cash App is a business Cash App, and it's under the Home Biz Tax Lady. So people know who, just make it easy for people to find you.
Okay, I was just using my phone number, but I was like, I don't know if I should make it something different. So I've been looking at other people's and see what people are doing.
Yeah, I really don't think that matters too much. It's just that's the way I set up my Cash App from the beginning.
Okay, and I just have one last question. I saw on the news that they said they're extending the federal taxes this year, but not the state.
That's not true. That's not true. So what happens is when they issue these types of, IRS and Congress said, hey, this is what we're doing. Well, the states don't turn on a dime like that. It just takes them a minute. Hold on a second. What state are you in?
Massachusetts.
Oh yeah, Massachusetts. They just conformed yesterday.
To what?
To May 17th.
Oh, okay.
Yeah, it's just that they had not had time to do anything yet.
So if you do your taxes, just do your state part and then do the federal later?
No, you can do them at the same time. Massachusetts has conformed to federal, which means they have extended their filing deadline as well.
Okay, excellent.
Most states have a tax deadline the same as or after the federal deadline. I don't know of any state that has their deadline before. So like I said, you know, whenever they have these different types of extensions and everything, they might say it on Monday, but it's going to take the states some time because then they have to follow their own state laws about changing filing and paying dates and all that. And it just takes a little bit longer for the states to be able to respond.
Okay. And I lied. I have one more question.
Okay.
If I start my eCom business and I decide to hire a VA,
Mm-hmm.
what tax ramifications am I responsible for if they're not saying in America?
Fantastic question. Okay. So it depends on how you hire them. If you're using somebody like Upwork or Fiverr, okay, you really don't have to do anything. So if you're using like a third party or a professional employment organization, you'll also hear them called PEOs, then you don't have to really worry about anything. That's their problem. But if you're hiring them directly, so let's say you hire someone from the Philippines, then you have to collect a form W-8, B as in boy, E as in echo, N as in Nancy, W-8-B-E-N. Okay. And
Can you repeat that again?
It's a W-8.
8.
B-E-N, like been
Yeah.
two of us need. Okay, I'm having a moment. All right.
Oh, you can sing. Go on, girl.
So you get a form W-8-B-E-N and it has to be renewed every year.
Okay.
And then you can deduct the payments as normal. Now, the Philippines, you're pretty safe. If you hire them from a, you know, from a whatever country, okay, I don't care where from, you have to be aware of the tax treaties that we have with those nations. So with some countries, you would have to withhold tax, and some you don't. So it's just being aware of the tax treaties whichever country you're hiring from.
I should be able to find that on some kind of website, or I got to go
Yes,
to the
on the IRS website.
Oh, IRS website.
Yes,
Okay.
if you Google tax treaties and whatever country, you should find it on the IRS website.
Thank you so much, Lusundra.
And so since you started out with no questions and you are just getting started, having that tax checklist, the tax deduction checklist will also help you get organized with knowing what you can deduct, and that's going to be key for you. And I'll also send you guys my tax workbook as well.
You're so good to us.
Because I love my eCom squad. Told y'all. Okay. All right, so we good?
Yes, thank you so much.
All right, awesome. Okay. Is it Ashioma? And if I butchered that,
Correct.
I'm really sorry.
No, correct. You got it.
Sweet. Okay.
Hi, Lusundra.
Hello.
I'm a virtual assistant from Calgary, Canada. I haven't started. I want to start off my ecom business soon, hopefully.
Okay.
But I want to start off on a, on the right note.
Okay.
And so I just wanted to come on here, hear what you got to say. I know you're good at what you do. I was wondering if there are any tips or whatever you can help me with to get me started out in the right way. Because sometimes you hear, if you're going to be so pro, then you can pay your kids, you have to be incorporated. I know taxes and all is a little bit different from US and Canada for both countries. So I just want something that can help me start off right.
Okay.
Because I have a 13-year-old and he'll be turning 14 next year. So I want to be able to get him on board. Yeah, just anything that can make me do it the right way.
Okay. So,
Yeah.
All right. So being in Canada, our tax systems are similar, but there are some differences. So I would definitely tell you to find a Canadian tax preparer. That's on my list of things to do, because I get a lot, I really do get, I'm starting to get a lot more Canadian people asking me stuff. I'm like, I don't know yet, sorry, it's been a little busy. So, but as far as getting started off on the right foot, having a, you know, like an in the States, having a sole proprietorship or a single member LLC, you get the same tax benefits either way.
Oh, okay.
So an LLC does not give you any more tax benefits than a sole proprietor does. The LLC provides an identity and a separation between you and the business, where a sole proprietorship does not.
Yeah,
Okay.
correct. Correct.
So as a sole prop, the way I explain it is this: if you're a sole prop, if you die, the business dies. That's it.
Mm-hmm.
As long as you're alive, the business is alive. So it's like physically, not physically, but it is linked to you. Whereas a single member LLC, you can actually sell that, right? You can sell your LLC. You can, you know, because that is a separate entity from you. So, you know, so as far as like any tax savings, there is no difference. And again, what I was explaining to Sanjeev, with your children, you really have to remove the fact in your brain that they are your children and treat them like they are a stranger employee. If you do that, then you will get this right, because
Okay.
you know, paying them on a regular schedule, them having their own bank accounts, right? To where you are writing them a check from your business to that kid and depositing that check in their bank account.
Mm-hmm.
Okay, you can be on the bank account, because, you know, most places don't allow minors to open checking accounts or to open bank accounts. So you can be on it, but you need to, you know, show where you have paid them and they are receiving that money in their checking account. Now, the thing that you have to be careful of also with paying your kids is that you're making sure that they are not paying for things that you would ordinarily pay for anyway. And I'm talking about essentials. Like, you're not trying to make them pay rent. You're not trying to have them buy groceries or anything like that, right? Because that is something that you would ordinarily provide as a parent. I look at it, think about survival type stuff, right? Because they need to eat to survive. Okay. Now, all the extra stuff, like, you are required to give them shoes. Now, if they over here trying to buy some Jimmy Choos, okay, you can use your own money to buy Jimmy Choos. I just need to give you some shoes, right? So that's how you separate, like, you know, what they can pay for versus what you should still be, you know, supplying, because that's what you would be doing anyway as their parent. Does that make sense? So
yes,
like, if
it
they
does.
want to go to the movies, even if they're playing sports, so you don't need sports to survive, right? So if they're playing soccer, baseball, if they're swimming, whatever, they can pay for that swimming out of the money that you paid them.
Sounds good. Okay, good to know. And so what would be your recommendation? You know, would it be better to just get incorporated right from the get-go, or start off as a sole prop and later on incorporate?
You can just get started as a sole prop. I mean, get started, figure out what you're doing, what you want to do. Because you might start this and decide this is not for me. It can happen. So get started, get your feet wet, kind of figure things out. And if you decide, okay, yep, we're going to stay in this, then go ahead and get your LLC.
Okay, thank you very much.
Okay, because LLCs come with extra bills too. I mean, you got to pay the fee to set it up, the annual fee and all of that. So I'm not for incurring those costs unless you're sure you're going to stay with what you're doing.
Okay, yeah, good to know. Thank you so much.
Okay,
And also, I would appreciate if I could get a deduct
oh yeah,
the
absolutely.
sheets you're going to send out.
Yeah, all of you are going to get that.
Okay.
So
Thank
I
you.
just have to make sure to send a note because it is tax season. So let me say this. If you don't see it like by Wednesday, ping Nicole because I probably forgot. It's tax season.
Okay, gotcha. Thank you so much.
All right. So, okay. So I think so far everyone here has asked their questions. Now, here's something that you all need to be aware of that's coming up. Starting for the 2021 tax year, this year, the requirements for 1099Ks are changing with the feds. So what had happened was the Treasury Inspector General did a study back in 2018, maybe, I think so, 2018, 2017, somewhere around there. It's usually a little while to catch up. But they figured out that people were not claiming the income the way that they're supposed to, even though you don't get a 1099K. Because the 1099K requirement was 200 transactions and $20,000 in revenue. You had to cross both of those thresholds in order to get a 1099K issued to you. Well, now that's changing, and I do believe they are reducing that to $600. So just know that for the 2021 year, you should be expecting to get a 1099K, even if you don't meet that 200 transactions and the $20,000 in revenue. There are also, you know, some tax credits that are also changing in the United States in the way that they're handling, like the child tax credit and you know, so if you get that, just know the way that that's being handled is going to change because they're looking at really getting the money out during the year versus having to claim it on your tax returns. So there's going to be some changes that are coming up in this whole tax thing. So like this really applies if you have, you know, if you got a job in addition to your e-commerce, but just know that, you know, those things are changing. So if you start to see like a little extra money in your paycheck and you're not really sure where that's coming from, check with your HR because it could be additional child tax credit money, but you can opt out of that and then have it show up on your tax return, because if you get overpaid that additional child tax credit, then you're going to have to pay that back. And so, and also like with the stimulus payments that just went out on March 17th, if you got those stimulus payments, that's going to be reconciled on your 2021 tax return. It's got nothing to do with 2020. You know, and so if it was based, of course, on your 2019 tax return, if your 2020 was not filed. Now, when you file your 2021 tax return, if you didn't get all that you should have gotten, then you'll get that on the 2021 tax return at the latest. There is a plan for them to go back and essentially do a scrub of 2020 tax filings so that if, you know, by the time you file your 2020, if you didn't get the amount of stimulus payment that you were due, then they will send that to you in another payment. I want to say they said July is the guidance that the IRS gave. But at the end of the day, if you don't receive that stimulus payment by December 31st, 2020, then it gets claimed on your 2021 tax return. Let me see what else is going on in these streets. There's a lot. That's the good thing about showing up to these especially when there's tax changes going on. Now, when you did any of you apply or were eligible for the Paycheck Protection Plan or the EIDL? Did anybody apply for that? or get it eligible?
So I applied for the loan, SBA loan. I don't know, is that a EDA, ELDI?
Yeah, EIDL.
Yeah, I did. Okay.
Okay. So when did you apply for that?
Yeah, last year.
Oh.
Yeah, last year
Okay.
around.
Okay. So with the EIDL, did you get the grant portion?
Yes.
Okay. So
No, I have to pay back. I don't know. It's a loan kind of thing, so I have to pay back.
Okay. So the grant, there was the grant, and then there's the loan. So the grant was $1,000 per employee type thing. Did you get that?
Yes, I got that. Yeah.
Okay. So that is not taxable, and you don't have to pay that back.
Okay.
Okay. And then with the loan, you know, the loan payments were deferred for a year. I do believe they are deferring those loan payments again until 2022.
Okay, that's good to know. Yeah.
So yeah, now the interest is still accruing though, even though it's low interest, the interest is still accruing. So you can still make the payments, but just know that they are not, they've extended the deferment. And then anybody get unemployment? So if you received unemployment, the first 10,200 is not taxable. Of course, they made this announcement after people had already filed their taxes. The IRS has said to not file an amendment, that they will make that shift on their own, that they will adjust it. But just know that it's the first 10,200 per person. So if you and your spouse both received unemployment, it's 10,200 for you, 10,200 for your spouse, up to 150,000 of income in your home. I got a question asking, is it necessary to have a separate phone for your eCom business? No, it is not. You can deduct what is the portion of your phone that you use for your business. So if it's, you know, 10%, 15%, 25%, just really be honest about that. If it's, you know, like 50% or whatever, because it is an auditable item, and not to say that you will be audited. However, the IRS commissioner did say that audits for small business, the Schedule Cs and all of that, those are going to go up by about 50% in the coming years. So.
Sandra,
Yes.
can you hear me?
Mm-hmm.
Regarding the EIDL law,
Mm-hmm.
here in Massachusetts, a lot of like small businesses that were restaurants, a lot of people kind of got hurt up here because I guess the way the language was written in the loans, they couldn't use it to, and I don't know if this is true, but they were saying, you know, like how you got the $1,000 for employees,
Mm-hmm.
but the loan part, they weren't allowed to pay like utilities or business expenses. It had to be only towards maintaining the employees. And, you know, a lot of people, though, they had mortgages and, you know, taxes and insurance to keep the business going, and it hurt them. And a lot of them folded because they didn't have the money.
So there's PPP and there's EIDL, okay? So PPP was specifically designed for employee salaries.
Okay.
Now, EIDL also has, you know, those certain restrictions. Now, when they were saying mortgages and insurance, they were talking about for the business, not for people's personal homes. So if you have a home-based business and you got an EIDL loan, it was not designed to pay your mortgage.
Okay.
So it was designed to, it was designed to pay a mortgage of like a standalone business. We had that question from the beginning because we're like, okay, what kind of mortgage? So yeah, so that was the difference with EIDL.
Thank you.
Let me see, I'm going through these tax updates. See what else you all need to know. Okay, there is also, there's tax credits, the family leave tax credit that's floating around. And so with the family leave credit, basically it's saying that if you were working at a job and you would have been eligible for a family leave credit, right? Then as a business owner, you are eligible to take that family leave, get that family leave tax credit as well. But there are a lot of rules, you know, it's, you know, basically centered around COVID. If you had to take, if you couldn't work because you had COVID-19, if you had to take care of someone that had COVID-19, you know, if you were not eligible to work, then this credit may be available to you. So that's something to ask your tax professionals about. If you receive the earned income tax credit, one of the unintended consequences of unemployment is that unemployment is not considered earned income. So there are people who would normally get the earned income tax credit who now became ineligible in 2020 because of the majority of their income was unemployment. And so what the IRS has allowed, or Congress has allowed, is to do what's called a look back. So based on your 2020 and 2019 income, if your 2019 earned income is higher than 2020, then you can use your 2019 earned income to determine your earned income tax credit for 2020. Okay, I need somebody to mute. I think Ms. Tina, you're not muted. Let's see here.
Eden hardware on Monroe?
Oh, yeah. There's something else too. If you had insurance through the marketplace and you received the advanced premium tax credit, after you know, a certain income limit, you have to pay that premium tax credit back if you exceed the income threshold. For 2020, that is not the case. So if you've already filed your taxes and you had to pay back premium tax credit, then we're still waiting for guidance on how to fix that. But we're also currently waiting for the updates and exactly how that is supposed to be implemented. Okay, we talked about the 1099K. Student loan forgiveness. Okay, so I did get some questions about this outside of this, but I'm sure, you know, student loans are everywhere, right? So there is supposed to be, you know, something about the current administration excluding some student loan debt. That is still not clear yet. So please, I don't care what you see in the news, if you're seeing something talking about student loans are going to be discharged and all of that, there's still some certain stipulations that have to go with that. So don't just go with the headline. You got to definitely read what is in the articles. So that's it for the major upcoming tax changes that might impact you. So just make sure that you're asking your tax professional about these changes, because it is a lot. And, you know, of course, tax preparation is taking a little bit longer just because it is a lot. It's a lot of different scenarios, a lot of different tax credits that are available to you. And so it is taking longer. So because we're having to go through all of these tax credits to see what you can get versus what you don't qualify for. So, all right. Yep, so right about an hour. So I am going to go and grab a bottle of water. If you don't have any other questions, like I said, this is, I mean, you really don't need to stay. I'm just here available until 2 o'clock Eastern for anybody that pops on. All right, but I am going to run and grab a bottle of water real quick. Okay, so I have 10:55. I will be back at 11.
Thank you, Lusundra.
You're welcome.
And the regular employee, like if I'm hiring part-time, so for them I have to run the payroll.
Yes. Yes, if you are hiring a part-time employee, you do need to put them on payroll.
Okay, got it. Thank you.
And so this thing about hiring employees is versus independent contractors has really become a big deal over the last 2 years. It was already an issue, but there was a lawsuit out in California that really brought this to a head again, and the fight with California with Uber and Lyft. So it's really Uber and Lyft's fault that this is an issue. Because, you know, from what they're saying that, hey, we're just a third party payer, we're not an employer, these drivers are not employees, they're independent contractors. And California was not agreeing with that. So that's, you know, how this became such a big deal. And more states are starting to follow suit. So it's getting more difficult to really classify someone as an independent contractor, and leaning more towards the employee side, because then the states are not getting their money. So they're not really excited about that either. But just know that that is something that you need to be aware of.
Okay, thank you.
All right, I'm still here. Here's something I just thought of too, that I also want to make sure that you get right. When you're reporting your income from your sales, you need to make sure that you are reporting your gross sales and then deducting your expenses, okay? So you're not reporting what Amazon pays you or what you get from PayPal when you sell on eBay or Shopify, whatever the platform you're using. You have to report your gross sales and then deduct, you know, all of the, you know, the Amazon fees, the eBay fees, the PayPal fees, and all of that. Deduct all of those as expenses. Because what happens is when Amazon and PayPal and all of them are reporting to the IRS, they're reporting your gross sales. So if what you're reporting is less than what Amazon is reporting, then you're going to get a letter from the IRS saying, hey, you owe us more money. When in truth, you really don't. It's just the way that you reported on your tax return was different. So make sure you do that. And this is something that happens time and time and time again, that, you know, my e-commerce squad is reporting this incorrectly. So just make sure you're doing that part right.
No, 1099.
Right. So Amazon issues a 1099-K, PayPal issues a 1099-K. When they report that, they're reporting your gross sales. They're not reporting all the $800,000 in fees that they took to sell your products. They're just reporting your gross sale. So you have to make sure that you're reporting that gross sale. So if you sold $20,000 worth of products on Amazon, even if you only got, you know, $13,000 that was paid out to you, you have to report that 20,000 and then deduct those other selling fees and your cost of goods sold as well.
Okay, got it.
So you should be deducting, you know, Amazon has selling fees, shipping fees, stocking fees, just because it's Tuesday fees. All of that gets deducted as expenses on your tax return. And even making sure that on eBay, you're also deducting the seller fees, whether you're, if you have a monthly fee for eBay store, or if you have seller fees. And I want to say, didn't I see something about eBay now doing their own payment processing or something like that? So, you know, those payment processing fees are also tax deductible. So don't forget those.
Say last year I only did the like a $200 or $300 on eBay, so I didn't get any 1099K. So do we still have to report it, or is it like it says it was a personal sales?
Yeah, you still report the income and deduct the expenses.
Yes. Okay. Thanks.
Mm-hmm.
Is there any deduction in your home, for instance, internet fees that you can deduct? Because we use that, of course, for our business.
I'm over here nodding my head and talking to myself. Yes. I'm actually looking for my checklist now. If you would, in the chat, put your email address, and let me get this checklist. Better yet, I am going to share. Obviously, I'm not sharing anything right now. Hold on. There we go. Okay. Okay, so I just put the link to my Google Drive where this checklist is. Let's see if you guys can get that.
I got it.
Talking to myself again. So you are able to click on that.
I was able to get it.
Okay, cool.
Yeah, it's working.
All
Thank
right, awesome, awesome.
Yeah, I got it.
See if I have. And let's see here. Mhm. Okay, I also just put in the chat too the link to my tax workbook to see if you can download that.
I got it.
Good deal. So you have the tax document checklist. I mean, not the tax document checklist, but the deduction checklist, and also the tax workbook. In the tax workbook, there's a couple of pages. It's an Excel spreadsheet with a couple of tabs. You know, the first couple of pages is your, is your personal data type stuff. But there's a page for your home office deduction. There's a page for business use of vehicle, and also just for business deductions. So on each of those tabs, especially like for the home office deduction, you have all the information that you need to provide to your tax person in order for them to be able to deduct it properly. And so the totals, you're just going to give them the totals for the year. So the total for, like, if you own your home, your mortgage interest, the total for your internet and all of that. And it is deduction based on the percentage of your home office to your overall living space.
Did you hear that?
I was mentioning about the child tax credit advance. And so what people have to realize is that the implementation of these laws does not happen as fast as people make these decisions. So all of that stuff has to be programmed. They have to figure out who it applies to, all of that to get to that point. So for it to be delayed, I mean, please remember that tax season is not even over yet. So people have, people's refunds are going to be delayed. There are still people who haven't gotten their refunds from 2020, from the 2020 filing last year. So, yeah, they can make these decisions really quickly, but the implementation of these decisions, it takes time. and they're still trying to work on tax season, and they still have reduced COVID staff, blah, blah, blah.
Do you know if the families will have to pay taxes on it for the kids getting the money, or it's going to be another?
It's a tax credit. So a tax credit is not something that you pay taxes on. A tax credit is a dollar for dollar reduction of your tax bill. Now, with this tax credit though, if you are overpaid in this tax credit, you will have to pay it back when you file. So, you know, just for me, I would not be rushing them. I would rather them take their time and get it right to reduce the amount of people that would have to pay money back.
Right.
So Sandra, that I'm not able to download that tax Excel sheet.
I have a couple of you guys in here. Okay.
Yeah, there's no option to make a copy or.
I'm not sure why. All right, hold on. You said you couldn't make a copy?
Yes.
Okay, so.
Okay, I think now it's working.
Maybe it's because I was in it.
So yeah, I can see it's in my Google Drive.
Okay. Yeah. Maybe it's because I was in it.
Okay, yeah.
Okay.
Yeah, thank you for your help. And appreciate taking your question.
Absolutely. Yes, there was one part that I forgot to record, but I don't think that really that really impacted anything.
Is there a link we need, Lusundra?
That is something that Nicole will have to do, because I'm going to send this recording to her and I'm not sure exactly where she's going to upload it.
Oh, okay.
I'm looking over my notes to see if I missed anything, you guys, that we need to know.
Is there any revision or rule change about taking people out to lunch or dinner, discuss business over it, and how much you can deduct it?
Yeah, we already covered that. The meals deduction is normally 50%. For 2021 and 2022, that deduction is now 100%. But, you know, for meals that are provided by restaurants. So it doesn't matter which restaurant, as long as it's provided by a restaurant. So basically they're saying you can't cook the food and then deduct it too. It's got to be something, you know, provided by a restaurant.
I'm looking at your checklist, and I don't know if you already covered this too, and I apologize if I missed it. On the charitable contributions, and you got like 3 stars, so that must be a big one.
So with charitable contributions, I think it's at the bottom of the page. At least it should have been at the bottom of the page, but I have not looked at it. Let me make sure it's still there.
That's kind of mid.
Yeah.
Midway.
So at the bottom of the page, it says that charitable contributions are not shown as a business expense, but as a deduction on the Schedule A. So, I really get this a lot. So actually, it's a good thing that you brought it up, because people will donate products that they did not sell, or it may be for, you know, whatever cause. That's not a deductible business expense. It winds up being an itemized deduction on your Schedule A. And so if you're not itemizing, then you won't see it. Now, that's for donation of products, right? Now, if you donate money, again, if it's a charitable donation, now for 2020, you get a $300 reduction in taxable income. That's on, your 1040. But for 2021 and beyond, as far as we know, it's $300 if you're single, $600 if you're married filing joint. But just for 2020, it's only $300, period. So just know that if you donate products on your from your business, that it's still it's not a business deduction. It goes on your Schedule A.
Customer samples of your product to, try to entice them to buy it. How would you classify that?
Okay. I have not seen samples in e-commerce, but if you do give away samples, then samples are tax deductible. So like if you happen to be in a network marketing company and you buy let's say a full-size product to get your volume, right? If you use that product as a sample, if you give that whole product away as a sample, then that would be a tax deductible expense, and you get your volume too.
Okay.
But when you are giving away samples, you better be documenting who you're giving a sample to, the date you gave it to them, exactly what you gave them, and when you followed up with that person, so that you could follow up to attempt to make a sale.
Wow, you gotta be that detailed, huh?
Yes. Because if you don't, then as far as the IRS is concerned, it didn't happen. And I think that's the thing that people miss, in that, yeah, documenting is a whole bunch of trouble. It's time consuming and all of that. But if you get audited and you don't have this documentation, then the IRS can disallow your expenses and you'll have to pay money back. So that's true for any of your deductions, whether it's your mileage deduction, business meals, whatever. This is why you keep your receipts, because people like, oh, I got my bank statement or my credit card statement. That is not true. Okay, you need to have your receipts, because your receipt is actually what shows what you purchased, the date you purchased it, and all of that. That's what substantiates your expense, not just the line item on your bank or your credit card statement. So if you wind up in an audit and you're like, okay, well, I got my bank statements right here. The IRS is like, okay, great. If you don't have the receipt, this expense did not happen. And then they disallow the expense.
Whoa.
Now, if your tax professional is offering you some type of audit protection, you know, this year, normally I'm not a big proponent of audit insurance. This year, yeah. Especially if you got, you know, PPP money or EIDL money. Yeah, that this year I'm like, yeah, I just get it. Because, you know, audits, and, you know, and that's the thing about audits. You know, we have people, you know, customers who come to us and say, well, you know, I want you to prepare my return, but not so that I get audited. And we can never tell you if you're going to get audited. That is not our decision to make. Are there red flags that make you get audited? Yes, but just on a regular day, no one can tell you if you're going to get audited or not. No, there's nothing you can do there because that's not our decision. Red flag type things like having all of these huge car and truck expenses. And this is the first place that the IRS goes. When the IRS audits a Schedule C return, this is, you know, my sole props and single member LLCs. When the IRS audits one of these Schedule Cs, the first place they go is mileage. Why? Because most people don't have a mileage log. If you don't have a mileage log, then your miles didn't happen and they disallow the expense. And your mileage is the biggest deduction for your Schedule C business. So documenting everything is absolutely key. There's something my mom told me a long time ago. She said, but she was saying it just to make a point. She said, you know, if you go to court and you have stuff written down and the other person doesn't, they're going to believe you even if you're lying because you wrote it down.
So Lusundra, what app would you recommend for capturing receipts and also capturing one's mileage, you know?
Okay.
A free app.
Well, so there's lots of mileage apps out there. And most of them have a free option, but it's very limited. So if you just Google mileage apps, most of them do the same thing where they track your mileage and your receipts. Even QuickBooks Self-Employed has that. But I don't think QuickBooks Self-Employed has a free option. So there's things like Mile IQ. There's, oh gosh, what's the other ones? Hold on. Yeah, Everlance is another one. There is TaxBot, there's TripLog, Hurdler. So there's a lot of different mileage tracking apps that are out there that also collect receipts. Like I said, QuickBooks Self-Employed has that. But, you know, some of them have free options, some of them don't. Some of them have free up to a certain amount of trips. And TaxBot also has, you know, where you track your mileage and track your receipts and all of that. But I don't think TaxBot has a free option.
Okay, thank you.
Is that Sandy Boykin or something that does that one?
Sandy Botkin, yes. Hey, Bonnie. I don't think she can hear us yet. Nope.
Is it okay? Hope you don't mind, but I think it was on Nicole's thing. You were talking about your background and how you got into taxes and something about how you're a EA compared to just a tax person. Can you go over what's that difference again, please?
Sure, that is, and that's also a very good question, especially since there is so much fraud and foolishness going on in the tax industry. So I am an enrolled agent, and what that means is I took a 3-part exam and passed all 3 parts, and I am federally licensed by the IRS to prepare taxes nationwide. There are what we call unenrolled preparers, and those are tax preparers that are not EAs. What people don't understand about the tax preparation industry is that it is not regulated. Anybody can go and get a preparer tax ID number. If they pass a background check, they can get an e-file ID number, buy some tax software, and voila, they're in business. It doesn't mean that they have studied an ounce of tax law. They just got some software, passed a background check, and got a preparer tax ID number. So, so with enrolled agents, we are required to have a minimum of 24 hours of continuing education every year. I average about 100. And with all these changes, I'm gonna be well over 100 this year. But there is also what we call annual filing season participant tax preparers. These are unenrolled tax preparers, but they have voluntarily enrolled in the IRS continuing education program. And so they, also commit to having at least 24 hours worth of continuing education every year. So the main difference between an enrolled agent and an unenrolled preparer, besides the requirement for continuing education, is also the ability to represent you when dealing with the IRS. And so you can, we have what's called a power of attorney, and that's where you sign this power of attorney, and then I can call the IRS and talk to them about whatever issue it is that you're dealing with at that time. And that's with any tax year. With annual filing season participants, they can only represent if they file the tax return. For enrolled agents, it doesn't matter who filed the tax return. So, and I actually just, I think I just shot a video yesterday that talks about finding a good preparer. A lot of times people go price shopping for tax preparers. They also go refund shopping for tax preparers. Neither of those are really a good measure for a tax professional. Especially the refund shopping, because, we get statements like, okay, well, you can only get me $1,000 back when Joe got me $4,500 back, so I'm going to go to Joe. Well, they don't know that Joe also created some false deductions and a false business and, inflated a refund that they're not entitled to. And they really won't know that until Joe gets arrested and charged from the IRS, and then their return gets audited and they got to pay that money back.
Wow.
Yeah. So yeah, it's just, knowing that the tax industry is really not regulated like other industries. And so as consumers, you have to be really smart about knowing about your taxes and be willing to ask those questions of people, and look for tax professionals outside of tax season. Most people want to look for tax professionals during tax season. That is the absolute worst time, because you really don't have the time to really, sit down and talk to them, get to know them, and see if they're a good fit for you. Because during tax season, yeah, it's just, no, it's crazy.
So would it be the same thing it's called in Canada? Are they also called enrolled agents here?
It's not called enrolled agents, but they are they do have a special name. Oh, they might be called enrolled agents.
Oh. Okay.
Yep. They are called enrolled agents.
Oh, okay. Thank you.
Mm-hmm.
And did you say you can do it in all states, Lusundra?
Yes.
So like H&R Block agents, as far as I know, they tell me they only can do taxes in the state they're working in.
So with H&R Block, that's also a really good question. With H&R Block, the person that is sitting in front of you is probably an annual filing season participant tax preparer.
Yes.
So they are kind of restricted in what they can do. So just to give you an example, I live in Virginia. I have a whole client base in Massachusetts. I have clients in Utah, Oregon, Florida. I mean, I'm trying to hit all 50 states. But annual filing season participants, depending on the state, may be required to take additional training. So for instance, Maryland, California, and I want to say Oregon, if you are not a credentialed person like a tax attorney, a CPA, or an enrolled agent, you have to take additional training and get additional licensure to prepare taxes in those states. Oh, in New York. So I don't have that type of limitation. I can prepare taxes in any state in the union.
Wow.
And so even with CPAs, CPAs are state licensed. They're not federally licensed. And so you're starting to see more CPA EAs, because EA is a federal license where they can assist with tax preparation nationwide. So, the difference between a CPA and an enrolled agent is that CPAs are accounting experts, where EAs are tax experts. Now, do we need to know a little of both? Absolutely. But it's just where the specialty is focused, because with CPAs, they spend a whole lot of time on accounting, and they spend a drop compared to their overall educational time is very limited in tax, where enrolled agents, that's all we do is tax. But we have to know enough about accounting to know if a balance sheet is off. We're looking at expenses to know, even though it may be a business deduction, it may not be a tax deductible deduction. So we have to know those things.
Wow.
Miss Bonnie, we saw you pop on here.
Talking to you.
I see a Bonnie Blue.
I don't know what I did.
I see your ceiling. Okay, I saw you just muted. So if you have a question, just pop on and give us your question. I will be here. This is going until 2 o'clock Eastern Standard Time. So you don't have to be here that whole time. You can get your question answered and get on with the rest of your Saturday, or you can stay here and hang out. We've covered a lot of information already. This is being recorded, so you can go back and review anything that you missed.
I just want to say it's just so nice hanging out with you and getting all this information. Thank you.
Great. You know, the thing about tax is you don't know what you don't know until you figure out that you don't know it.
Yeah.
And that's, you know, that's kind of what happens in conversations like these. It's very difficult to do a presentation that is applicable to everyone, because when it comes down to tax, tax is just like fingerprints. No two are alike. You might have some of the same elements, but no two tax situations are alike. So there's really generally never one blanket answer to everybody's question.
All right.
Miss Bonnie, did you have a question? Did any of you have any questions about business structures? I know Ashioma asked one earlier.
Other than the guides that you provided, do you have any other guide or workshop or something to walk through how to go about setting up things step by step in business or e-commerce wise?
So when you say setting things up step by step, what do you mean?
Like just how to, you know, get your business up and running, the things to put in place.
Okay, so are you talking about like the business structure?
Yes.
Okay, so for business structure, single member LLCs are pretty easy. Anything above that, I would tell you that you need to hire someone to help you. Most people will go to a site like LegalZoom, InkFile, all of that, and go set up their own structures. But there are rules that go with different types of business structures. And when you go and set things up by yourself, it's assumed that you know the rules. So when you go to these sites to set up different business structures, whether it's an LLC, an S Corp, partnership, it is assumed that you know what you need to know for these particular business structures. And so, you know, this is why, you know, we tell you to consult with a professional before you do these things, because the rules are different for each different type of business structure. So there's no, so again, there's no one right answer for that. For a single member LLC, that's pretty easy because the rules are the same as a sole proprietor. But once you start getting into S Corps and C corporations and partnerships and things, that's a different animal.
Okay, thank you.
But, you know, so like using those sites for like to set up an LLC, again, those are okay, because you really, for a single member LLC, 9 times out of 10, you're not going to blow anything up. So whether you use a site like Northwest Registered Agent is also a good site to use. So you can use one of those sites for a single member LLC, generally not an issue, or go to, for us in the United States, each state has their own Secretary of State website to go and set up your LLC. Though generally, like I said, you won't blow anything up with a single member LLC. But once you start getting into multi-member LLCs or partnerships, S Corps and C Corps, you need professional help, period, to understand the rules that are involved with you owning those different types of business structures. And so the presentation that I did for the eCom Seller Summit, it goes through a brief overview of the different types of structures and what's required of those structures. But that's surface level stuff. Surface level mean like these are the basic things that you need to know before you go and opt into one of those business structures. The rest of it can get really complicated as you start operating other business structures. And I'll give you an example. Let's take an S Corp, for instance. With an S Corp, you, the owner, have to be on payroll. So you have to essentially pay yourself a wage, and you are your own employee. A lot of people don't know that. When they form an S Corp, because they hear on the streets, oh, you'll save in self-employment tax. While that might be true, what is also true is that you may pay at the state. People don't know that either. So all that money that you're trying to save in self-employment tax, then it gets spent on administrative costs. And so you really have not gained anything. At least with, people are saying, I don't want to overpay my taxes as a single member LLC or as a sole proprietor. At least if you overpay in self-employment tax, that's going to your Social Security and Medicare. And so if it's still there by the time you get to retirement age, then you will get the benefit of that, right? But if all of your costs wind up going to administrative costs, then people like me get your money and you get nothing because you really have not saved anything. So that's why it's important to really get professional assistance when you're setting up these business structures. I have a client right now who is having a serious conniption because she thought she could deduct A, B, C, D, and no, ma'am. And so, but that's what happens when you do things and you don't know the rules. Now, for the people that are here, is this your first year in e-commerce? I know, Ms. Tina, you said you're just getting started.
Right. I was going to say I've been, watching Nicole and watching the videos, but I haven't actually opened it up, the business yet.
Okay. And so what platform are you planning on using to sell on?
I'm not sure, but might be Shopify.
Okay.
And I'm trying to stay away from Amazon. I don't like large corporates like that. I think that's what hurts the small mom and pops in your community. And I don't like the way they're so large, but that's just my personal opinion. So maybe Walmart might be, not Walmart, but I'm trying to learn how to, like all these, like Macy's and JCPenney's, it supposedly might be closing, how to get some of their inventory and know how to list it and hopefully make some money.
Okay. Well, hopefully Nicole and her squad can be able to tell you that, because I have no idea. But the reason that I asked that, you know, like if it's your first year, is, you know, really to kind of gauge like where you are. So one of the things that I recommend before really jumping into, you know, any platform really is just to learn to sell stuff, period. And what I mean by that is that you might go list something on eBay, right? And really make sure you understand the process of how it works. And you can do that on a small scale instead of, you know, getting ready to get ready. So while you're learning how to sell on Shopify, because the thing about Shopify is that you got to be able to run traffic. And so, yeah, so if you, because I have a client who is making about, she's grossing about $1.5 million on Shopify. And for 2020, it's more than that now. But last year she grossed about $1.5 million, but her profit was about 300,000. And most of her expenses went to traffic.
Wow.
So, you know, so just keep that in mind. You know, like, yeah, you might not like, you know, the fact of, you know, Amazon and everything, but at least with Amazon, if your keywords are right, you can sell. Shopify, you need to run traffic. And the same thing with eBay. With eBay, you can, you know, keywords will sell. Okay, so I just got an email from Miss Bonnie to ask her question. She said she didn't know how to chat on the phone. And I don't know, I guess she thought it was over. Okay, so her question is H&R Block qualified to do her e-commerce taxes if they have all the expenses? And she said they were using them for the last 3 years, but hasn't been doing any business. It sounded like they can do it. Didn't want to switch around because they said it puts a red flag to the IRS why I'm changing. Okay. Changing tax professionals does not throw up a red flag at the IRS. Okay. That's some foolishness. The other foolishness that I've heard is that claiming a home office is a red flag for the IRS. Again, that is foolishness as well. So just know that. Is H&R Block qualified to do your taxes? It just really depends on the person that's sitting in front of you and what level of experience they have. So that, and unfortunately, I can't tell you that because who knows who you're going to wind up with. And she also asked, can I be hired because she lives in Florida? Yes, I can. But that's, again, it's all a personal preference, okay? Some people prefer to be able to sit face-to-face with their tax professionals, which is absolutely cool. Some people are okay with virtual, which is absolutely cool. It's just your preference. And as far as the capabilities of the H&R Block or whatever, it just depends on who's sitting in front of you. I couldn't answer that question. Should they be able to do it? Yes. But can they? I don't know. That's an honest answer.
This one will fit fine, and it's still that
So,
receipts that the guys.
and let me also email Miss Bonnie back really quickly. And I'm just going to pause this recording until someone else pops on and has a question. Mm-hmm.
So you say you're from the Virginia area, right?
Mm-hmm.
Question. I have a family member that's starting to do house shopping. As far as taxes, I mean, they used to be able to deduct your depreciation on the interest on the house, right? I mean, not the depreciation, the interest on the loan from the, from the mortgage.
Right, the mortgage interest deduction, yes.
Is that
That's-
still work, or I thought they cut it out or something?
It's an itemized deduction. So what happened with the Tax Cuts and Jobs Act is that there are a lot of deductions that were taken away and others were limited. So for instance, your state and local taxes are limited to $10,000. So between that and depending on how much mortgage interest you have, you may not be itemizing just because the standard deduction was doubled. So it would just really depend on, on how much it all is. And in Virginia, it's not going to be that much mortgage interest compared to the Northeast in property taxes and stuff.
Mm-hmm. She's looking in Maryland area.
Okay, yeah, Maryland. Yeah, Maryland can be pretty pricey too.
Mm. Now, first-time home buyer programs, things like that.
There is no, as far as I know, there is no first-time home buyers programs right now.
Oh my goodness.
Not that I know of, like federal first-time home buyers programs, like credits.
Mm-hmm.
Yeah, as far as I know, there are none. There are none.
Did that change this year or?
No, it's been for a few years.
Oh, that sucks. Excuse my French.
Mm-hmm.
So the old way, you used to could deduct interest, what, at no limits or something?
Right. So mortgage interest is limited to your the first $1 million. But even still, like I said, if you don't have enough other deductions to itemize, then you won't see any additional benefit to having the mortgage interest.
How about if you end up being a landlord and have tenants? Does that help you?
Well, that's different. That's an investment property. That's not your primary residence.
Right, but I'm saying as a tax benefit, does that help you with reducing your tax burden?
Not necessarily if you're claiming the income that comes with the rental property.
Mm-hmm.
So it just depends.
No. Sounds like, again, good records, right?
Yeah, I mean, people rent out part of their homes? Absolutely. But with that comes, claiming the income, having a lease, knowing tenants' rights, and, and deducting that, because if it is an investment property, the same exclusions that you have for your primary residence, like with the first $250,000, $500,000 married joint, if you've been in the house 2 out of 5 years, then you can exclude that. When you have an investment property or you rent out part of your house, you lose that part of the exclusion. So it's a payoff either way.
Okay.
So, you just have to, like I said, knowing the rules and knowing because there are plenty of people, there are plenty of people who wind up putting their primary residence in a single member LLC because they heard somebody say to do that. But when they go to sell that home, then they got to pay taxes on all of the gain because they don't get the primary residence exclusion, because putting your home in an LLC then makes it an investment property.
Say that one more time. That's interesting. Say that again, please.
I said, if, people, you'll hear people and you'll hear on these street committee, all these street committee tax advisors that tell you to put your home in an LLC so that the business owns the home. When you do that, then you lose the exclusion that would be applicable to a primary residence. And so when you go to sell that property, then you pay taxes on all the gain. There is no exclusion.
Whoa. Sounds like that bites.
Yeah, so that's what I'm saying. You have to, when you're doing this stuff, anything that's related to business, if you don't know all the rules, then, you hear something on these street committee tax advisors, you have to consult with somebody. All right, we have a new attendee, so you can hop on and let us know who you are, where you're from, what's your question?
You meant me?
Yes, you.
Thank you so much.
You're welcome.
My name is Uğur Sahin. I am from New York. Actually, I saw it was a little bit late. I just wanted to join. So, but Lusundra says I think it's gonna be recorded.
Yes, it has been recorded. Yes.
That's great. I can listen later.
Yes, so we've covered yes, you said you missed a lot. Yep, we covered a lot of things and we've talked about a lot of stuff. It really is just a QA for things that are related to your business, but I'm sure the questions will help everyone. We've covered deductions and such. I don't know can you see the chat from before you got in here?
No,
okay.
I can see.
So I will, let me put these links in here for
Great.
you.
So I can listen to later, but at this point, actually, I would just have one question. If you could answer, that would be great.
Okay.
I am an Amazon seller for a couple of years. So my only question actually, if I don't have any nexus at the other states, so since mostly we do the FBA type of business, not the FBA, if I don't have any nexus at the other states, am I supposed to still pay some taxes for the other states? Since this issue actually is not certain as far as I know, but I need to make sure about what I'm supposed to do for the states I don't have nexus.
Okay, so you may not have physical nexus, but do you have economic nexus?
All right.
So that's the question that you have to answer.
So you mean how much am I selling at those states? That's what you mean?
Right, how much you're selling at those states, and also even if your inventory, so if you're selling on Amazon and you have inventory in, let's say, New Jersey, that could create an economic nexus for you.
I see, but I don't have the FBA type of inventory.
Okay.
So, yeah.
So you just have.
Yeah, I just have one warehouse at New York. That's all.
Okay.
So I don't send any shipment to the FBA.
Right, but
so I don't use the warehouse of the Amazon.
Right. So then then it just depends on how much you're selling and to where.
All right. So I should calculate all of them. If they are above some threshold, I should pay taxes. That's what you say, right?
Right. But and again, you also have to know the rules of the state, because there are some states that have like a minimum sales, like, whether it's $200 or something like that, that you have to file. There are some states who are zero states where it doesn't matter how much you sell that you need to file.
Okay. So state by, it depends on the state I am selling, right?
Yes. So there's 50 different states and 50 different sets of rules.
All right.
So there are some states, if you look at the streamlined sales tax registration, there are several states who are basically trying to streamline that so that they're conforming to the same rules, but it's not all of them. maybe about 20.
Okay, for all those states, if I have the economical nexus, I should take the reseller certificate, right, from all those states.
Mm-hmm.
All right, all right. I got you. Thank you so much.
You're welcome. And I put I just sent the links to you. One of them is a tax deduction checklist that, that I have for e-commerce sellers. And the other one is also my tax workbook to also help with tax deductions. It sounds like you've been doing this for a while, so you may not need that, but that's what what I sent earlier.
Okay, thank you. Thank you, Lusundra.
You're welcome.
Mm-hmm.
But yeah, the sales tax nexus, became a really big deal in 2018. And that's the Wayfair versus North Dakota. And so, like I said, some states are, trying to really make it easy for sellers. And then you also have the third-party marketplace rules, right? So if you're selling on Amazon and Amazon is collecting and paying on your behalf, then you don't have to worry about that. But if they're not, then that's when you do. And you also have to be aware of when Amazon or whatever platform you're using doesn't necessarily meet the threshold for filing as a third-party marketplace seller, but you do as an individual seller.
As far as I know right now, Amazon actually collects and then remit all those tech sales for most of the states.
Yes.
Yeah.
But still what you have to do is to make sure, like I said earlier, trust but verify, just to make sure you don't miss anything.
All right. But we still, in case, we still pay the New York, since we are in,
yes.
We still pay the New York tax sales each year.
Mm-hmm.
But we just assume that Amazon, yes, like you said, I need to verify and then check all the other parts. And for all other states, actually, we assume Amazon collect the sales and then remit the sales. When we look at the statements, actually, we see Amazon collects all those sales.
Mm-hmm.
All right, I will do that.
Yep.
What about the past years, actually? Yes, as you said, we heard that the Wayfair type of the problems at 2018,
mm-hmm.
But the 2019 and then 2020, and then Amazon actually brought these regulation to its marketplace.
Mm-hmm.
And it started collect and remit the sales after that court order
right.
from state. Yeah.
Right.
But yeah. Now we use the tax jar, for example, as you know, to collect and then automatic payments.
Mm-hmm.
What about the other years? What should I do for the past years? What do you think?
So a lot of the states have a sales tax amnesty. So I would look into that, when they have their sales tax amnesty, that's when they basically say, okay, you can come pay what you owe us without penalty and us coming for you.
Mm-hmm.
And so again, that's a state by state thing.
Okay, thank you so much.
You're welcome. Yeah, so don't miss out on those, because the thing about sales tax amnesty is if you're following the particular states, then you'll see it. But generally, it's not something that hits the national news.
All right. Okay.
Okay. And so what I was saying earlier is that, I'm here until 2:00 Eastern Standard Time for people to pop in and ask questions and things. And so, if you get your questions answered, then you can, go on about your Saturday. I'm just hanging out here waiting for people to show up and recording when there are questions.
Thank you so much, Lusundra.
Right.
So, yeah, if I would like to watch it again, what you talked about earlier, how could I do that? Are you going to share the links?
It's going to be, I'm going to send it to Nicole, and she's going to put it up on the membership site. She just sent me a message and told me that.
Thank you. Yes. All right. Yeah, I bought the membership for the summit. Okay.
Mm-hmm.
Thank you.
Yeah, that's some good stuff. Okay.
Yes,
all the stuff that went on at the eCom Seller Summit, I was like, yeah, that's fire.
It is. Yeah, I really liked it.
Yeah, and that's really why I come back every year. Because it's like, y'all do good stuff.
Okay, thank you so much.
You're welcome.
So I need to leave then. Thank you so much again.
All right, you have a great day.
according to the IRS, how many years can you claim a loss without them saying it's a hobby?
So the general rule is 3 out of 5 years. And let me explain how that works. So the IRS looks at if you are in business and you have a loss, that loss offsets other income, and that reduces your tax liability or it increases a refund, right? Now, if by year 3 you aren't turning a profit, that's what raises an eyebrow, because they're saying, okay, basically, how are you still in business? That's what they're looking at. Do they automatically assume that you are a hobby? No. And operating, at that 3rd year at a loss does not necessarily mean that you're going to get audited, because they're looking at the history. So if year 1, let's say you lose $10,000, year 2 you lose $3,000, and let's say year 3 you lose $500. Well, that's a progression in the right direction, right? Because you're losing less and less money every year. So that may not necessarily trigger an audit. But if you're losing $10,000 year 1, $15,000 year 2, another $10,000 year 3, that's when the IRS goes, hold on, because you're not moving in an upward progression. Does that make sense?
Yes.
So yeah, so that's kind of how the IRS looks at that.
Okay, thank you. All right, thank you for everything today. As usual, you're always on point. I enjoy watching you and listening.
Thank you so much. You have a
All right, have a
fantastic
great
day.